This is just AMZN. Thursday, May 30th, 2019. And I went ahead and sketched this in because it would have been a little bit challenging to do both of these during the recording. So yesterday, we had a triangle open up, break down into a double bottom, retested with an upper wick, back into that apex, a rollover, and then a rally into the close. Today, same thing. Opened up with a triangle, break down into a double bottom, actually held the 1815 price, bounced up into or retested back up to the apex with an upper wick, rolled back down very much to the same low, and then bounced and rallied into the close. I mean, it kind of bounced here, kind of bounced here. We did get an initial low and then another candle that came in as a slightly lower low. So, I mean, so similar today as it was yesterday. Yesterday rallied a little bit higher, right back into that same apex level. Today we didn't quite get that high. And so it really looked like we were making just some pretty significant lower highs and lower lows, kind of a downtrending channel here. Whereas yesterday was a little bit more of, I guess, an opening triangle and then just sideways the rest of the day, because it really just zigzagged. Today was much more bearish. We had, let's see, yesterday was a bearish candle, today was a bearish candle. Let me see if I can clear these. So I just wanted to go through that just to show, okay, when you take a step back and look at these candles, or look at these charts, they're so similar, especially just look at this upper wick here. I mean, we came up a little bit higher today from this one yesterday, but this one was kind of a inverted hammer, and today's was a much stronger, I think it's like a dragonfly, or I don't know, it's inverted dragonfly. I don't know the name of that candle, but either way, it really did a great job holding that. I know I just drew it not quite straight, but that level, that large bearish candle, it did a great job holding that as the high on these candles, very similarly to how we held the high on these candles with this bearish candle. We just didn't have as large of one here. I mean, if you squint and you combine these two, then it definitely pushed it back down. So a lot of opportunities to go bearish after this initial breakdown, a little bit of opportunity to go bullish here as it came into the 1815 price and actually held and bounced. It did that kind of here yesterday as a retest of the neckline. But today it really, I mean, you have this candle that closed, made a lower high, lower low. Let's see, is this a lower high? No, not a lower high. 1 penny higher on the bullish candle. So it's actually a bullish engulfing. Didn't realize that. Okay. And then it pulled back, bounced again right off of 1815, and then rallied there. A lot of great opportunities to trade bearish and bullish and bearish again. And I guess kind of bullish again with that hammer. So the bearish, this candle here. So anyway, if we jump over to the daily, we can see that we've got a lot of candles just sitting right here in 1815. If we break lower, I still like a target down here of 1747, 1728. Gosh, 1714.15 would be crazy. But if we break down, I mean, there's a lot of bears that are going to take profits on its way down. So if we gap down tomorrow, I mean, it's a potential for Monday to be down at 1728, down at this kind of crisscross. If it goes slower down, has a little bit of retracement, roll back over, this could be a nice target, this crisscross here. So 1747 by next Friday. Those are some potentials. And the reason I'm talking about it potentially gapping down is because after hours here, it looks like we are. So we've taken out the lows here after hours. So look for a small retracement, retest, even an opening 5-minute bearish, bullish candle to then be traded lower. But I mean, there's a lot of bearish candles here, so it's definitely a bearish retest gap. So it could open up and just race down lower, and then it has a bit of a retracement and S curve. I guess what I'm picturing is, let me draw it again, something that looks like that. and you want to get in there on the retracement, especially if that, wow, that was bad. Especially if that correspond, that's bad too. I can't draw a straight line. Okay, especially if it corresponds with this area here, which is around low 1800s, 1805, 1810, somewhere in there. If it comes back up to that, that'd be great. So, oh, those came back. So we'll see what happens. If we come back into just the day here and look at some options, bearish engulfing here, you could have been getting it on this candle. That's at 945. And then we'll look at a bounce over here at like 1115, 1120. So 945 on the puts, 945. So you could have been getting in here. This is like maybe 4 by 3, and that went up to 6. That would have been a nice gain. And then I guess it sort of happened again, but here's the hammer. So putting your setup a little bit lower, so like 350 by 250 or 4 by 3 once it gets down there, that would have worked again up to 5, and then it does an S curve here and just continues on up. So 6 would have been a nice target there. So from 4 to 6, and then again 4 to 6, that worked. And then on the call, this is the 1825 call. What time was that? 11:15, 11:20. That would have been like buying 7 by 6, and then up to 9. Came right back into this level here. Not quite back up to the apex, but you can see this is a triangle here, and you've got a nice resistance where that low was at the open, right around 10. So going, yeah, 7 up to 9 would have been a 2-hour gain, and then it just rolled over completely from there. Got a little bit of bounce into the close, but I mean, it was really hard to buy anything because it just kept going lower for a while. Here, if you had bought a low here, it moved up. If you bought a low here, it moved up a little. Bought a low here, it moved up. But I mean, if you're buying these lows, it just collapsed. So once it got below here, the low in the morning, it didn't even get back up to that price in the afternoon, except for what it did here over the lunch hour. So a lot more bearishness today. You can see the downtrend channel, the lower lows, lower highs, even on the call options. So not a lot of opportunities there. The puts, there are a lot more opportunities. Nice consolidation. I like when it goes sideways and just holds a value because it gives you a lot of opportunities. If you want to be aggressive, you can get in on a low here. So like getting in at 350 by 250, getting in 350 by 2. It just depends on how spready the options are. And once it finally breaks out, it's great. Same with this. I had a nice hammer here. Had I been looking at this option and seeing hammer, that would have been a great place to get in after seeing that. And it gave you a great entry too. You didn't have to get in 350 by 250. You could have waited for a bit of a pullback, maybe 325 as your entry, something like that. But this was right into the noon hour or noon time, and that was that hammer. This was the same kind of rollover with the apex that we had. And the other thing I saw here is, like we had yesterday, a double bottom here, and then this retest the neckline. That was the only thing that could really cause this to bounce here, with a bit of a neckline here or here, and it didn't get going on this one. So again, let me draw it. If you consider this to be your neckline, and that's your double bottom like this, then it didn't bounce there. And if you consider this to be a neckline, it didn't bounce there. So either one, it just continued to collapse, and it was a better trade to go off of that candle at that location to go and roll over bearish. So that was the edge today, and looks like it may continue that way a little bit longer. So we'll see if see how far we can go down. This is a no man's land, no man's zone. We have gone very strongly bearish through here quickly. A lot of times we chopped around on our way back up, went quickly a couple days. That's why I'm saying if we get something like that candle or that candle, I mean, we could very easily get down to 1747 tomorrow. Even this one, we get really close. I would not be going out and buying 1750 puts right out the gate. I think those will lose a lot of value since it is a Friday expiration. It'd be great for those to explode higher. But what you'll want to do is scope out some of the options in the morning if you're going to go same day expiration. Let's go out a few more strikes. I'll put in a small number here. 50. What we got? Okay. So right now the 1750 puts are, let's see, does it last $32? So that may hover around that price with a gap down of around 20, but we'll see kind of where things open up in the morning. I would look for an absolute zero play, maybe 1777 if this opens up around $1, or later in the day if you can get it for $1, because if we can go sideways for a little bit and lose a lot of premium on these, and then it just collapses and pushes down even to 1760 tomorrow, that'll be $15 in the money. So if you buy it for $1 and you could sell it for 15, I mean, that's a great trade. But I'm not saying it's going to happen. The lower amount to pay on an out of the money put that's going to go into the money as this rolls over and dies, rolls over and goes down by 50 points. What's going to give you the most bang? What's going to give you the most return? It's definitely the potential for, a 20-hour day tomorrow with what's setting up. It just kind of has the right setup to do it. So if we can get any sort of rally and get if there's any way to get even up to 1815, look at the 1800, look at the 1790 puts to see how much those are collapsing in value with theta decay, and see if you can just risk something really, really small. That's what I would suggest to do, so that you're only risking the full amount that you would be okay losing. And then as this, let me switch back to, so as it does some sort of ebb and flow like this, you're going to get in here as it's starting to break down, and you're going to get out on that initial push lower here. So you're going to ride a trade down bearish like that and be out, and like that and be out, because this will eat away at a ton of your profits. And if, as long as it's going nicely in your direction, even a candle like that is going to eat away some of your profits. Look to take, look to set this up with something small to risk and take some small gains. The only thing that I would say to look for that could help it move more quickly would be the squeeze or the squeeze momentum changing. And so if we have like the bigger triangle we had yesterday and that squeeze was forming for longer, that pushed things down for a while. That bearish momentum continued here. Today, same thing. We had the triangle happen here, and that was a very wavy line, but we had the squeeze forming the whole time, and that bearish momentum carried us down. I mean, it went very quickly into support. That's the place to get out right there, because that and then that took a while for the momentum to shift, but you were losing a lot of your premium here. You can definitely see that if you look back at the 1800 puts. This was getting in at 4, and if you did not get out initially at 6, it retraced all the way back to 450. And at this point, you're like, I'm only up half an R, 4 by 3, I'm only up half an R. What if it goes further? I still want a winning trade, and you panic and you sell at the low of the pullback, where that's actually the best place to have been. I mean, getting out here at 6 and getting back in on a pullback to 450 because it's retesting the level here. Getting in at 450 by 350 and riding it back up to 6 or 650 it got up to. Probably getting back out at 6. That would have been 2 R here, 1.5 R here, and that would have been 3.5 R on just that bullish move there. So that's what I see the potential for. And obviously you have your own trading plan. That's your own money you're risking. So I'm not trying to tell you how to do it, how to invest it. That's not anything that I'm responsible for. So there's probably some legal jargon somebody would say right now about all that. But know what you're going to risk, and that's just the potential that I see for things to move. I'm not saying it's going to happen. So we shall see. And should be a fun day to trade and see if the markets will continue to do some more collapsing here and just run lower. We are continuing to trap. I mean, all four of these bearish candles are really trapping a lot of bulls in here, looking for that to bounce off of that level. Our first signal was this one that actually gapped down, retraced, then a bearish gap and go here that has just been sideways, bearish gap and go again here from this one. So we've got double bearish gap and goes that it looks like tomorrow are going to actually start to go bearish. So we'll see how that plays out. Hope you enjoyed this video. This is just AMZN. Thanks.